Okay, ladies and gentlemen, so the next trade that we're going to talk about in our sequence is called a base trade. A base trade. So let's take a walk over to the chart and let's look and figure out exactly what a base trade is. And what a base trade is, ladies and gentlemen, is a period of time when a stock is going sideways and it is not in a trend. So if we take a step back and we look at this chart, it is clearly not in an uptrend. Maybe it started one here, but at this point in the chart, this stock is going sideways. It is forming what we call a base. First rule for a base trade, we want this stock to go sideways for at least 30 minutes. And remember, each one of our candlesticks is 5 minutes worth of time. So we have 5, 10, 15, 20, 25, 30, 35, 40, about an hour of this stock just going sideways. So the theory behind a base trade is, this stock is going to tell us which way it's going to break once it does come out of this base. Important about a base trade can break up or a base trade can break down. When a base trade shows us that it's going to break up, we want to be long and buy the stock. If this were to break down, we would want to be short and sell the stock. We want the base, the range of this base, to be no more than 50 cents. So if we come over to the chart here, I am going to circle the point where this stock is in an absolutely beautiful base. All this time, as we can see in the chart. That is the actual definition of a base. Stock is going sideways for more than 30 minutes in a tight range. And what do I mean about a tight range? Well, we can see that the top of this range, let's call it $122. And the bottom of this range here is $121.80. That is perfect. This stock is trading in a nice tight range. And what this is, think of it as a rubber band. And the stock is just going sideways and sideways and sideways. The rubber band's getting tighter and tighter and tighter. And eventually, when you let go of that rubber band, it's going to start to whip around. In this case, how we're actually going to execute this trade is we're going to take the high of the base and the low of the base. And as soon as this stock breaks this base by 5 cents and gets to $122.05, we are now going to buy this stock with a market order. This is the first trade now. We talked about our trend trade, limit order we used to get into it. We talked about our regular moving average trade, and we used a limit order to get into this trade. This is the first trade now where we're going to use a market order. And the reason we're using the market order is because we don't know the exact price that it's going to break out of this base. So once it shows us that it breaks this base by 5 cents, we want to enter the stock with a market order. Our profit target on a base trade is anywhere between 25 cents and a dollar, depending on the price of the stock. And here's how we place our stop order. Very simple. And we're actually, on a base trade, more often than not, we're going to risk less than 50 cents on a trade. We are going to simply take the bottom of the base right here at 121.80. After we entered at 122.05, that is going to be our stop order. We are only risking 25 cents on this trade. Very low risk trade. And our profit target's going to be, this is a $122 stock. When we're long at 122.05, our profit target is going to be 123.05. And if we go take a look at the chart here, you can see we got in the stock at 122.05, and about 5, 10, 15, 20 minutes later, the stock got to 123.05. Beautiful. Perfect. In a base, going sideways, breaks out of the base, shows us that we want to be long the stock. We buy the stock at 122.05. Stop order goes at the low sale of the base. Profit target is $1 on a $122 stock. So right after we buy the stock at 122.05, limit order goes into sell it at 123.05. This trade took about 15 minutes to play out. Important things to remember about a base. We need that sideways action for at least 30 minutes, and then it's going to tell us which direction it's going to break, and whichever direction it breaks, that's the side of the trade that we want to be on. Now let's look at another chart.